Welcome everybody to the 40 Finance channel. Today we're going to be talking about Google stock and where it stands as of June of 2023. It's a very interesting stock because you have a full-fledged bull and bear case for this one. So I'm going to give some perspective on both sides of the coin and share my thoughts on where Google lands. And of course, as we're going through Google stock, we're going to be using the charts and data from SeekingAlpha Premium. If you're interested in learning more about this outstanding stock research platform, my affiliate link is in the description. And if you use my link, not only do you support my channel, which I really appreciate, but you also get a full year of SeekingAlpha Premium for under $20 a month. It's a pretty outstanding deal, and there's also a 14-day free trial on the front end of that offer as well, so definitely check it out. Okay, let's take a look at Google here today. You got a stock price of $126.85, and you can see the sort of circus act that's been going on over the past year. Clearly, you are off the peak of late 2021, which really isn't that surprising because there's a lot of stocks that are in that same scenario. But recently here, with all the talk of AI as well as the strength in the NASDAQ as a whole, you've had a ship that has turned around pretty significantly. In fact, year to date, Google's up 41%. And if we look at the momentum indexes, so if you talk about 3 months, 6 months, 9 months, and even going down to price performance in terms of total return, you know, in the past month, 6 months, year to date, Google has very clearly beaten the S&P 500. And in fact, even the last 12 months, if you want to incorporate some of this recent performance, the last 12 months have been above the S&P 500. So from a momentum scenario, Google is definitely rewarding its investors. Now, from a valuation scenario, you'll see that Google actually, by most measures, is slightly undervalued from what we've seen over the past 5 years. And this table here comes right from SeekingAlpha. They incorporate the 5-year average across several different valuation metrics. Now, we always want to be looking ahead, so I'm not going to spend a lot of time on trailing 12 months. But if we take P non-GAAP forward, Google 26.25 is the 5-year average. They're coming in under that, 23.5, and that's a difference of 10%. So just on a simple PE non-GAAP forward, this stock still conceivably could have another 10% to go, at least from a multiple scenario. Now, if we go to GAAP PE forward, you are minus 12% from the 5-year average. 26.69 is the 5-year. 23.43 is where we land here today. Now, if we go down to some of the other metrics, let's look at price to sales forward. Okay, 5.29 today. That is just a smidge under the 5-year average, minus 6%. 5-year average is 5.65. Price to cash flow, looking ahead, 15.66 is the projection. Google comes in on a 5-year average is 17.14. So bottom line here is across several different multiples, right? Depending on what you look at. Google's trending about 10% down from the multiples that they have received on average over the past 5 years. All right, so we think back, we got momentum definitely running as a positive right now for Apple. We have valuation. It's not supremely undervalued, but there's definitely some more room to go if you compare to 5-year averages. What about growth? And this is where some of the concerns start to come in for Google. So I'll put growth as a concern, and here's why. If we get to revenue growth forward, okay, looking ahead, you've got 9%, just under 10%. I think, I would bet $1 that Google would outperform on revenue growth, but it's not going to be a huge number over this, okay? Maybe 10, 11%. But their 5-year average is much closer to 20%. So from a revenue growth model versus 5-year average, you're down 50%. And that's a little bit of what you're seeing on the valuation side. And quite honestly, with this disparity from the 5-year average, Google's multipliers could be a lot lower. Now, what about EPS growth? Okay, EPS diluted growth forward, single digits again, 3.79%, but the 5-year average has been 24%. So Google is minus 84% off their standard EPS average. And then even if you go down to something, let's say free cash flow per share growth rate, 8.29% projected in the future. In the past, they've been building that at about 20%. So again, you're over 50% off the growth rate that they have seen over the past 5 years. Okay, so almost across the board from a growth rate percentage across different measurables, right? Google is not achieving in the same fashion that they have done in the past. But let's think about the future and try to speculate on where this stock can land. Now, if we were all to agree that Google stock's number one problem right now is growth rate, then you really have 3 paths that you have to project on where Google will land, right? And the very first one is in existing business, okay? And far and away, the number one part of Google's existing business is advertising. And we know that the advertising world scaled back significantly from the end of 2022 and here into the first part of 2023. And while you might make the assumption with all the talk about recession and declining savings rates and student loan payments coming up, it's pretty safe to say that American consumers are going to be under more pressure as time goes on, if anything else, from student loans and rising prices. But the other thing to keep in mind with a search engine like Google is while those are bad things, theoretically could influence big brand advertisers to scale back in spending, high debt, okay, and student loan, bankruptcies, repossessions, whatever you want to say, there's a niche in there of very lucrative advertising for Google, okay? Those types of terms, whether it's bankruptcy or refinancing and stuff like that, if you think about them in terms of keywords and how they get bid upon in an ad auction, they're very, very expensive keywords. That's still not bad news for Google because they are probably making more money per search in bad credit finance type categories than they would be making, say, for something like gym shoes. All right, now the next flip of the coin that you have to think about is, of course, AI. And that's where you're going to hear Google's name come up the most from a stock perspective anyway. And, of course, the race with Microsoft and NVIDIA. Who wins the AI race? How does it impact Google's business? Is it a net negative or a net positive? Well, my particular thoughts on this are very simple. Number one, Microsoft and NVIDIA, they are definitely worthy opponents. However, I think the way this is trending from a consumer standpoint with AI, I think there's plenty to go around for everybody, certainly in the early innings. And the point that I've made in the past about Google and why I really, really like them in the world of AI is ultimately AI is based on data, okay? Whether that data is inputs or if, say, database, and nobody, maybe Apple at the absolute closest, nobody has more human data than Google. Okay, and you got to think about this not just from web search. All right, you have to think about this in terms of location data, maps data, shopping data, search history across large swaths of industries. No one can make their AI-powered offering run off better data than Google, and that, in my opinion, is a big boom. But I do think that it takes 3 to 4 years for any of these companies to figure out how to really translate all this AI hype into actual dollars. All right, now bottom line for Google. Where do I think Google sits at about a year from now? Well, if you keep in mind that a year from now, we'll be using 2024 EPS projections, let's see how this looks, right? So we've got fiscal period ending in December of 2023. That's basically what we're dealing with right now. You've got an EPS estimate of 533. That's where you get your forward PE of 23.48. All right, but that won't matter a whole heck of a lot when we start talking about being in 2024, waking up in June or July of 2024. In 2024, if you take the consensus of 626, which by the way ranges from 504 to 729, if you take 626 and you multiply it by Google's average forward PE multiple, which I believe was about 24 or so. So if I take 24 times 6.26, I get a price of $150. If we were to look at today's price at 125, and you say 150 next year, that's not super exciting for a 12-month hold, but keep in mind, that's a 20% increase if they hit 150. And if you follow the stock more closely, you may come up with a different earnings per share for 2024. And we'll start to see those projections tighten up a little bit, particularly as we head into Q4 shopping season. Okay, so is Google a buy from a stock perspective, in my opinion? At 125, I don't think it's awful. I think that you have the opportunity at this point to get in on some things that people are doubting about Google. If you talk about AI, if you talk about the advertising spend that's going to come out of big advertisers, you are placing a little bit of risk, but at the end of the day, if you factor in Google's computing power, okay, their cloud network, their data, their advertising, their search engine, as much as we think this world is really going to change, immediately with AI, the fact of the matter is it's probably going to take 5+ years for the average Joe walking down the street to really see AI impact search engines and the way that they are used in a meaningful way. Now, the best scenario for investing in Google would obviously have to be a red day at this point. If you're at 126 today, can you wait to see, minus 10%? That's going to put you right about $110. If you just saw a little bit of a downtick, maybe you get that in the next summer earnings. It's hard to tell, but you definitely want to be as patient as you can. This is not one that I would buy on a hypey news release. I would be looking probably more for a negative news release to make that purchase for a long-term hold. And of course, we don't want to spend all of our money buying the stock in one day. You'd want to pepper it in somehow to keep giving yourself an advantage from a cost basis standpoint. All right, guys, let me know what you think about Google stock and where it's going heading into 2024. Before you go, don't forget to check out that Seeking Alpha special offer. My link's in the description. Hope everybody's doing well. We'll see you on the next video.